Hi, and welcome to The Pitch. When it comes to investing in Asia, the narrative is familiar. Long-term growth potential, a booming middle class, political and economic reform, and strong balance sheets. But that doesn't always translate to rising stock prices. So what are the main drivers for optimism in this asset class, and where are the best ways to take advantage of this opportunity set? Well, to break it all down, I am delighted to say that we are joined by Andrew Swan of Man GLG. Andrew, you've worked in Asian equity markets, best part of 2 decades, something like that. So I think you'd be the perfect person to ask this as a scene setter question. How does this current environment compare to other cycles you've invested through?
Well, again, cycles, there's both short and long-term cycles. I think the short-term cycles tend to be driven by monetary and fiscal policy. And we're seeing changes. Obviously, in the last week or two, we're seeing some pretty significant changes in the largest economy being China, which are favourable, and the equity market's responding to that. And again, these cycles last for short periods of time, maybe years, couple of years or longer. But the long-term cycles are really more like 10-year cycles, I think. Certainly I've seen in my career. And I think we're on the verge of potentially one of those occurring. And the last 10 years in Asia has been actually quite difficult. It's been an asset class, I think, to your introduction, has promised a lot and totally underdelivered. Corporate profit growth has been very mediocre, if any, virtually no profit growth in the region now for 10 years. And you compare that with developed markets, which have seen profit growth. It's no wonder that the rest of the world has outperformed Asia. But the setup we're seeing right now is actually really interesting because I do think we're on the verge of inflection in profit growth, both short-term and long-term, which will be very favourable for these markets.
Andrew, I understand you've just come back from a couple of weeks in Europe, meeting investors and meeting clients. So I'm curious, from your trip away and from other forums you've been to of late, what is the question you are being asked most by investors today, and how do you answer it?
Yeah, look, it's been an interesting few months because I have travelled not just to Europe but elsewhere around the world, and the feedback's been very consistent. It is a reflection of a market that's done poorly in many ways. I think it's hard to get any interest in the asset class. I think people see the problems in China. We've heard the words uninvestable. I never say that, but that's certainly the feedback we're getting. And I think the immediate opportunity that people are seeing in front of their face is really going on in other markets. And so, the interest in the asset class, I would say, is at an all-time low.
Yeah. Well, that might be coming to an inflection point, as you alluded to in your first answer there. So as you say, sentiment has been extremely bearish. You took the words right out of my mouth. Some people say that it's uninvestable and have been saying that for a while now. What makes you think, granularly speaking, if you had to bring it down to say 2 or 3 main reasons, what makes you think there is going to be an upturn?
Okay, so at the heart of what drives markets, it's really important to remember, is corporate profit growth. Now, there are lots of things that people cite. There's lots of things you might read in the newspapers around why the region's doing poorly or not. But if it doesn't impact corporate profit growth, ignore it. Okay, that's number one. So why do I think now corporate profit growth is going to improve in the region? Well, there's really 3 key points that I'd like to highlight here. Number one is where we are in the artificial intelligence cycle. Asia has benefited in a narrow sense. There are some companies that are world leaders in semiconductors in the region, and they've benefited from this first phase of growth in artificial intelligence, particularly around large language models, ChatGPT. These are companies selling semiconductors into data centers, pretty much. But what I think 2025 will be a year where the innovation that comes with the step change in technology, in this case artificial intelligence, moves from upstream companies like semiconductors and the cloud and data centers downstream into devices and really leading you and me to buy a new phone. I don't remember the last time I bought a phone, or I don't remember any change in functionality for my phone recently, but I do think we're on the verge of significant change. It will entice you to go and buy another device. So that's really number one. And Asia has a lot of companies in that space. Number 2, I would say where we are in the global monetary cycle. Asia has not had an inflation problem, which is unusual. Normally we are running whatever the world's facing, we are that plus 50%. In this cycle, the last 3 or 4 years, we've actually been low beta on global problems. We haven't had inflation, we haven't had growth. But the challenge in Asia is our central banks tend to import large economy monetary policy. So it's a very unusual setup right now where we don't have inflation, we don't have high growth, but we have monetary policy that reflects that, because most central banks want stable currencies. So we have just inflected in US monetary policy. It's taken a long time, longer than I think most people thought, but that is putting the power back in the hands of central banks in the region at a time when there really isn't any inflation, and in some economies they're actually doing okay. So we're really giving a big boost to these economies from a monetary policy point of view. I think third, and probably most importantly, is where China is. Again, it's going to benefit from that, what I talked about, monetary policy shifting. We've seen that in the last few days. We're seeing a big boost in fiscal policy coming through as well. But I also think we're on the verge of structural change. And this is about long cycles, not short cycles. And I do think policy is going to shift to be more supportive of the demand side of the economy, particularly through consumption, rather than just the supply and investment side of the economy, which is what we've seen in recent times. So it's these three factors. It's where we are in the AI cycle, it's where we are in the interest rate cycle, and where China is in its short and long-term cycle. I think it's going to boost profitability for most companies in the region after a period where profits have disappointed.
Okay, so putting that all together then, if you do think that sentiment change, that structural change is coming, tell us then about 3 assets or themes that you think investors should be eyeing.
Well, I think number one would be China. I think you need to be thinking about stocks that benefit from reflation in the economy, improving pricing power, which drives improving profit growth. I think subcategories in number one would be things like consumer, industrials, and some areas of financials. Number two, I'd put some of these smaller economies like Indonesia and the Philippines as big beneficiaries of where we are in the global monetary cycle. Again, economies which are doing pretty well, don't have inflation, but they're running tight monetary policy, and that has just changed in the last short period of time. So I think the outlook for profit growth in these regions, smaller economies, is very exciting over the coming years. And then thirdly, I really think this move in artificial from upstream to downstream creates very interesting opportunities at the stock level. Asia has companies that do components in computers, in phones, all sorts of things. And they're world leaders. I mean, not companies you may have heard of, but you're probably using their services. And I think these companies are on the verge of finally getting a product refresh, new growth, after a period where, ultimately what they do has, a lot of people are now doing, it's become commoditized. And when products get commoditized, profitability comes under pressure. So you've got a lot of companies in this space that are suffering at the moment, but on the verge of, I think, pretty significant growth.
All right, beautifully explained there. Andrew Swan of GLG, thanks very much for joining us. And thank you for joining us for The Pitch. If you enjoyed that interview, you can subscribe to the Livewire Markets website as well as our YouTube channel. See you again soon.